Next week, on April 15th and April 16th, Bank of Uganda will be auctioning off 3 treasury bonds. It will be auctioning off the 20-year treasury bond, which I believe it's the best bond in this auction. It will be auctioning off the 10-year treasury bond, which I tell clients right now it might not be the very best bond to buy because of the premium. And the 3-year bond. Now, the 20-year bond has a 10% withholding tax. We have talked about that very good. The 10-year bond also has a 10% withholding tax. The 3-year bond has a 20% withholding tax. So for investment and tax planning, you might be better off to buy the 10-year bond and all the 20-year bond, though my preference is on the 20-year bond. Now, these bonds are coming at the time where we are in the midst of the war, where everything is starting to unfold with the Gulf War, and we have been at it for almost over a month now. Remember, the 20-year bond, the last time it got auctioned off on Feb, it came in at a discount, a very, very small discount. It had a yield rate of 15.49%, right? The 10-year bond, the last time it was auctioned off, it again in Feb, it had a yield rate of 14.5%. At that time, the war in Iran had not begun, and the disruption it has done in the Middle East had not begun. So that means that at that time, Bank of Uganda was making sure the rates are coming down. Since then, we have had significant disruptions because of the war, and we have seen an upward tick in interest rates. We saw it in the March auction, where the 25-year bond brought in a 16.29%. We saw it in a 15-year bond where it had a 15.75%. By the time that the 15-year bond brought in a better yield, cut-off yield than the 20-year bond, it means there was an upward tick in interest rates. Now we are coming in the April auction. It's coming at the time when there is a little bit of some truce within that war. Now that war starts to impact us, but it's coming at a time when we are about to start going to another political season. This is a unique political season because that's when the president is going to be sworn in. That's when the MPs are going to be sworn in. That's when the budget is going to get approved. Now there is a little bit of, sometimes we say, a little bit of deals that get done around this time, which is interesting. How will that impact the desire to raise more money? And will the government take on more money at an expensive rate? Or are they going to continue their stance to make sure they reject significant amounts of money to make sure interest rates come down? You remember a week ago, the World Bank representative in Africa was at State House. World Bank is back on the table to lend to the government. They announced, listen to the $500 million US media project funding. That kind of deals, they kind of have a trickle-down impact on the interest rates in the treasury bonds. So as you go into next week's auction, the best bond you're going to have to deal with is going to be the 20-year bond. If somehow between now and next week we continue to see more disruptions, the slight peace we are seeing in the Middle East because of the 10 peace point program that they are trying to negotiate on, if it gets disrupted significantly, then there we might end up seeing the interest rates coming up. But if the peace we are seeing right now, the truth we are seeing continues to be, we will see a little bit of a reduction in interest rates. Right now, the 20-year bond is trading at 15.9% on the secondary market. The 25-year bond is the best. I had 2 of my clients where we got them with some amazing deals yesterday at around 16%. 16%, that was really good because it's not easy to come by right now in the secondary market. The 10-year bond is trading at 15.3%. So maybe if it goes 15.3, 15.4 in the primary market next week, you will pay a premium. But the best bond to go for is the 20-year bond in next week's auction.